Elizabeth Banguku from Cytonn Management.
Hi, Sam.
Hi, Hetal. How are you?
Great. How are you keeping?
Oh, very good. Can you see me? Am I clear?
Yes, very clear.
Yeah, just go ahead with the presentation.
Okay, so I don't need to share it with the people. Okay, fine.
No, you can share it with the people.
I'm trying to share. I can't be able to share. Try and do it on the Zoom or wherever. You disabled it or something. Share screen. Now I'm trying to share screen.
Please, Irene will guide you just now. She's the one who's the admin for today.
Oh, she's the admin. Then I have shared the presentation with her. Let her just share the presentation. Sorry.
Okay, that's better. So Irene, you can just share the presentation.
But as we wait for the presentation to come on, maybe just as a way of background, we have seen a lot happening globally, especially after the pandemic started off. I think for Kenya, we kind of ran with it a little bit faster because we did not wait until the last minute for us to maybe close out on what people should do. We have seen a couple of things happen. So places like Nairobi, you cannot move into Nairobi, you cannot move into Kilifi and Mombasa. So that lockdown has maybe helped us in a bit in just making sure that the spread is not across the country. However, I think as the economy is, and since due to the fact that maybe we might not be able to support everybody, then the economy still has to continue. So people have to go to work because we are not able to get, the government is not able to feed the people in Kenya. So you cannot lock down people and yet you are not feeding them. So I think those are some of the challenges we have as an economy. The fact that we cannot be able to kind of give people food, and you cannot tell people, you cannot tell a hungry person to stay in the house. So I think the balance has to be struck in between, whereby how do you help people continue with their normal lives, and as they say, not normal life, but the new normal life, and at the same time, just make sure that the spread is contained. I think as a country, when you think about it, our economy is not, or our health sector might not be able to support if there was a significant outbreak of the virus. So containing it will be a big part of what needs to happen. So basically what I have done is prepared a few slides on the macroeconomic side, really top level, just telling us what is it that we expect, maybe from the currency perspective, from the interest rate perspective, from the inflation perspective, stock market, and then maybe just a discussion. How do you guys see it? And in terms of, do we see more inflows coming back into the country? I think we have seen that as well. We shall look at the diaspora trends, remittances trend, the forex reserves, and things like that. So Irene, I don't know whether you can share the presentation or I continue without it.
She's just sharing shortly.
Actually, I can't share. I've actually been able to share, so I can just proceed. So in terms of the starting point, so from where we sit is that the economy, the challenges we are going to see, they're not mostly going to be on the healthcare side, because that is given the fact that we don't have a lot of bed capacity. Maybe most of the counties have not been able to put up the hospital that up to standard maybe, but I think there has been a lot of allocation to the health sector. But for me, what I see as the biggest issue is actually the economic shocks that come up with this, because the fact that people are not able to go to work every day like they used to go to work. We have a very huge informal sector in this country, so that is the biggest challenge I see, and how the government actually comes to address that is what will determine the next set of action. So just looking at the economic growth, The GDP growth is expected to decline significantly this year to a rate of about 2.3%. That is the average consensus. From where we sit as a house, we think that that will be much lower. We were projecting something like, just give me 1 minute, sorry. I want to put down there. As a house, we were looking at the GDP coming in at about 1.6%, but the average consensus is about 2.3%. Maybe to put it into context is that if the economy is growing at a rate of 2%, inflation rate is at about 6%, 6-7%. It actually means that on a real sense, we are actually declining as an economy. So our real GDP actually is expected to come down this year compared to maybe last year. But on a nominal basis, we are looking at a growth of about 2.3%. However, we are a bit lucky compared to other countries, like maybe when you speak about Nigeria, where they are largely dependent on commodities. For us, our economy is very widespread. Agriculture at about 18.6%, and financial services maybe at about 6.4%. So if you look at the diverse nature of our economy, it actually provides some sort of cushion compared to economies that are largely dependent on one commodity. That is not to say we are not going to be impacted. If you look at agriculture, which accounts for about 19% of our GDP, we export a lot of our commodities to the developed world, especially maybe Europe. When you think about our tea, our coffee, that is going to be impacted because the demand has come down and the supply chain actually has been disrupted. So we expect almost like a decline in growth in the agricultural sector, but likely is that at least here back home, then the food prices will remain relatively stable on an ongoing basis. So the diverse nature of our economy really cushions us, but that is not to say that you're not going to see declines or in growth compared to the previous years. So on the inflation front, inflation is expected to remain stable at ranges between 5% and 7.5%, which is within the government target. And this looks high when you're thinking about maybe the inflation rate in places like the US. But for us, this is really relatively really low. And the main reason for this is that the disruptions that we are seeing in the supply chain are actually going to be sort of countered by the lower oil prices. I think this is the first time that we have seen significant drops in oil prices, which is a good thing for us as a country. So the next thing is on the currency. There are a couple of factors that determines how the currency works. So there is the forex reserves. This is just what is held by the central bank. We have seen that decline over the months from a high in April of about over 5 months of import cover to a point where we are at about 4.4 months of import cover. What this means is that we definitely have to have reserves that we can actually run the country without any more foreign inflows over the next 4 months. So that has been declining just because central bank has been coming into the market to support the shilling. So they would come into the market and buy into buy shillings and supply the dollars so that we do not see a significant depreciation. But again, a 6% depreciation over that short period of time is significant. We have now seen a lot of stability. We're at the shilling at the 106, 107 shillings level. Going forward, we still think that there will still be a bias towards depreciation. I think the 108 sort of level will be like our new norm, just because of the fact that the forex reserves are coming down. If you look at the next slide where we have our current account deficit, the current account deficit had been correcting, and last year we were at about 4.6% of GDP. We actually think that trend is going to reverse, and maybe we'll be at about 6.3% of GDP for this particular year, and maybe even we could see correction next year. So this is just to look at the inflows that are coming in from the various sectors, and that's the fact that we are not importing more, but also our exports have actually been significantly impacted. If you look at the diaspora remittances, yes, they have remained relatively high. At about 228 billion in January, I think in March, but that was also a decline. If you just look at the trend analysis, that was a decline. With what is happening globally, we could actually see maybe more deep on that, because as I would look at it, with the inflation, with the unemployment rate in the US at over 14%, What that means is the people also who are sending dollars back home actually have maybe less dollars to send back home, and they're also trying to cushion themselves. So we could see slight declines in the diaspora remittances, which would impact the currency. So on the interest rate front, nothing so much dramatic has happened so far. Just measured by the 91-day Treasury bill has remained relatively stable at 7.2%. However, if we look at the entire yield curve, the yield curve is just a plot of the yield versus the tenor to maturity. There has been a slight increment from where we ended the year at, especially on the long end, just meaning that people are asking for more sort of return by investing in government securities. There was talk that the government was looking at postponing some of the coupon payments with the Retirement Benefits Authority, but that is not something, I don't see that being something that is going to happen, because then it will impact significantly the attractiveness of government paper, and it will be almost similar to a sort of default, which I don't think we are yet there. If you look at the international markets, Eurobonds trading in the international markets, just the chart here, you can actually see, yes, there has been an uptick in Kenya in terms of the yields of bonds listed of the Eurobond, but we are not as bad compared to something like Zambia. The reason why Zambia would have a significant jump is because they are largely dependent on commodity, and with what is happening, the demand for commodity prices have come down. So as a country, yes, our risk levels have increased based on the pandemic. However, we are not as badly off as compared to other countries. But now, subsequent to this, maybe you have also seen the downgrade of the Kenya as an economic hub. So the Moody's actually downgraded the country, and just because of the debt levels and how that has evolved over time. But I think as we look at it, yes, we are significantly indebted compared to where we were 5 years ago, but we are still okay. So what the central bank then has done, the Monetary Policy Committee, is just that to make sure that there is sufficient money flowing into the economy, they have actually done two things. They have brought down the central bank rate, which is actually used as a base rate for lending, and also they have reduced the cash reserve ratio. What these two things do is that they will release the money into the economy, and then that amount of money is what they are pushing banks to lend into them, especially to the small and medium enterprises. So what is naturally expected to happen is that money is expected to be lent out, and then once it's lent out, then there is the flow of money, and with the flow of money, then the economy is expected to peak. However, there is a lot of risks at the moment. When you look at what is going on, you might lend to someone, but you're not able to recover from them. So in as much as there's a lot of happening in the monetary policy, I think it will take time for it to filter through the economy. However, all these are really positive sort of signals that are coming in from the monetary policy, that they will do anything to support the economy. I think the next thing is that there has been a lot of talk about the government debt, and is it sustainable? Is it in the right direction? So what I decided to do is just to say, first of all, how has it evolved over the years? So to start us off is that if you look at what happens, how do we get into debt? It's just that we are just like an individual. We are spending more than we are earning. So the government's revenue collection has been projected to continue increasing. So it has continued to increase, but our expenditure has also caught up or even grown faster. So what that does is it creates a hole, what we call a physical deficit. So that physical deficit can be filled by doing two things. You either sell the assets that you have, or you borrow. Over the last couple of years, it has been very difficult for us to sell any of the assets, because what we would sell is really the parastatals. So we have not been able to do an IPO over the last years, just because maybe of the nature of the status of most of the parastatals. So you really need to change them before you actually go to the market to sell them. So the easiest target has been to go to the market to borrow. So the local debt has continued to grow. The international debt has continued to grow. And how we have actually been borrowing, we have been going to the commercial, to almost like capital markets to borrow, which is slightly expensive. So our debt service levels have continued to grow. So if you look at the recent changes through the supplementary budget, our physical deficit is at about 0.9 billion. So how we are financing this is that about 404 billion is being borrowed locally, and I can't quite remember the numbers, but about 300 billion is actually being borrowed from the international markets. Part of that has been borrowed already, like what we got from the IMF the other day, just to cushion what is going on. So a couple of that money has been borrowed, but again, the indebtedness continues. So just look at the structure of the country's debt has grown to about 6.3 trillion Kenya shillings, of which the external debt has overtaken the domestic debt. It's at 3.2 billion, and we are currently at and the domestic debt is at about 3.1. The external debt is what for me is a bit of a concern, because then when you're servicing that debt, you have to borrow to buy dollars. If you borrow, you're buying dollars, then it means that your currency is actually going to fluctuate, and you're really open to what is happening in the global market. So maybe some of the reason why we were not significantly impacted by the financial crisis is that we were not highly reliant on commercial debt from the international markets. But as you speak now, we are at a 50-50 sort of level. If you look at our debt service to revenue ratio, the amount of revenue that you're using to service debt, that has continued to grow. We're at about 45%. The recommended is at about 30%. Our debt to equity ratio, the target is supposed to be 40. I think we are at a levels of about 60. So our debt levels as a country, they are getting to a level that is not that beautiful, so to speak. So it's just one of the things that maybe the government shall have to look at and just see how then do we negotiate all this and then come up maybe with better concessional sort of borrowings. On the stock market, like any other stock market, there has been a significant decline. As measured by the NASI, we are down about 20%, 21%. The NASI actually looks at the entire stock market. So it is down about 21%. But that is not, we are not the worst performing when you look at what is happening globally. We are if you look at something like SAMRACK is the Mauritian Stock Exchange, it's down about 32%. And maybe when you look at the S&P, now it's only up about 8.6%. It went down, but it's recovered, it's about 8.6%. So yes, we have declined, but also that comes with a bit of maybe positivity for the people who want to jump in. And maybe just to look at some of the specific stocks and how they have performed on a year-to-date basis. I'll just look at the top chart there. Some of the stocks like KCB are down 33%, equity about 32%, Bamburi at about 44.7%. So some of this, when you look at especially the banking stock, nothing structurally has changed. You cannot say that the banking sector has become worse than it was last year, significantly worse, for you to warrant about a 33% decline. So if you look at the next slide where we have the valuations now have become attractive. So since the prices have come down, you're buying stocks at significant lower valuation. So any banking stock that you are paying about 1 times book, so for every shilling of the book value that you're getting, you're paying 1 shilling, they're actually very attractive. So KCB at maybe 0.9 times book, it's a significantly attractive books. For anyone who is looking to jump into the stock market, maybe these are the right valuations to jump in at, fully knowing that you'll never know the lowest level, so you can only ride the market. So in summary, we are not looking at all the factors that you have looked at. Our GDP growth projections, we think it's negative because we expect that this year will be a significantly rough year, but we will expect some recovery come next year. On the inflation front, that will be neutral, just because the oil prices will actually cushion us on that end. The currency, we expect a depreciation of the currency going forward, maybe to about 2 to 3% from where we are. Government borrowing, that is actually negative, because we expect to borrow much more. On the interest rate front, also, we actually think that the interest rates should tick up. As much as the Monetary Policy Committee is bringing the CBR rate lower, I think the government pressure to borrow will actually cause interest rates to go up, especially on the bond market. On the investor sentiment, we think that it's going to be a little bit neutral, because again, this is time to jump in, and nothing really has changed on the security side. So in summary, maybe just looking at what is going to maybe help, what the government should be doing, maybe to help cushion the economy much further, is ensure that there is money in the hands of the consumers. And this is, it's really doing by just making sure that they are paying off the people who are providing services to the government. Also, maybe just the money that is intended to go to the vulnerable people just reaches the right hands. We don't know how that is going to be done, but that's what they need to do. Then they need to continue negotiating some temporary debt standstill. So we, for example, with China, it's one of our biggest sort of lender. So what we should do is just negotiate with them for a loan restructuring, so that maybe we have some time to restructure our loan, and just so that we don't use the money as much as possible to service the debt. Then going forward, we need to maybe relook at our debt levels, and what we need to do is look at loans from more concessionary loans, from people like the World Bank, IMF, because those ones are coming at a little bit cheaper rates, and they have a longer maybe payment term. They're not more commercial. And then continue strengthening our manufacturing sector and the supply chain, just to make sure that we have what we need. So I think one commendable thing about this country is that people are really entrepreneurial, as all the masks that we are currently using, most of the masks that we are currently using are being manufactured in Kenya. So it means that there's a lot of potential of us really doing a lot. So in a nutshell, yes, it's a bit gloomy going forward, but I think when we do the right things, 2021 will be a much better year. And for any investor with a long-term view, maybe it's just to look at what current valuation, what are the current sort of price, look at the current prices and jump in and get what they need to invest in. So maybe from there, we can just maybe take questions, discussions, comments. Thank you.
Elizabeth, that's a wonderful presentation, very detailed. I actually learned a lot. My question is on the diaspora remittances. Are you guys able, or is CBK able to narrow down which particular area or region or state that brings in the large chunk of volumes? My other question is, I was reading an article where recently Kenya-Tanzania border was closed, right? I was reading an article whereby the red onions that comes from Tanzania are not able to reach Nairobi. So will there also be like a food shortage in a way that will affect the economy?
Okay. So on the first one, in terms of whether we can know where the diaspora remittances comes from, yes, by region. So if it's the US, we would know, but we would not, I don't think we would know the states, but we know that the US is the amount of money that comes in. I need to look at it and get the numbers there. So you can actually tell where the money is coming from from the diaspora. In terms of the closure of the borders, yes, because you see, there could be, it's sort of supply chain disruptions. So there will be times when the prices will go up just because things cannot get into the country. And it's not only because of the Tanzanian border, it's also because of maybe the weather patterns. So for example, you would be, when you think about Nairobi, they get a lot of their foods maybe from up countries. And let me just speak from where I come from. I come from Narok. So we supply a lot of potatoes to Nairobi. Just the fact that the roads are so bad and it has been raining, then the prices in Nairobi, they'll just come down. So they would be temporary, and I think there's going to be sort of solutions that come in between Tanzania and Kenya. Yes, there's always those issues, but I think we will always get our way out. But those supply chains will definitely cause some slight increment in prices, but they're not permanent.
Okay, very good. Mm-hmm. I tend to differ with, actually this is a different comment. You mentioned there might be a decrease in the diaspora remittances. Mm-hmm. I hope I hope we'll not experience the decrease. Point is, a lot of, and I could be wrong, a lot of diaspora people work in the healthcare industries, and those healthcare industry are stable and they've not been affected. And we're also receiving a lot of emails and calls. We're keeping in touch with our people back home. And trust me, this is the time we are receiving those calls. Please, we don't have money, kunanja. So in as much as the whole economy is affected, yes, we're expecting a decrease, but we may be surprised it might be stable, maybe even slightly higher, I don't know. However, the transportation sector also holds a large number of Kenyans. That has been affected, but I would say like 6 or 7 out of 10 people in diaspora, especially in the US, work in the healthcare field. They've not been very much affected. They're still going to work. They may have experienced like a 14-day quarantine period away from work, but they're still receiving their check. And I think that is important. However, there's a good number of people who are not receiving this. They're working from home. They've exhausted their sick time and vacation time, so the check might not be coming. But we're hopeful maybe in the next 1 or 2 weeks, the economies will be opened and back again, we'll continue sending that money.
Thank you. I think we are waiting to receive the money. It will help. It will help support us.
Okay.
Yeah,
I have a question.
No, yeah.
I have a question.
Mm-hmm.
Yeah, my name is Daniel Karanja, and I would like to hear from you. What do you think will be the long-term, possible long-term consequences of this epidemic for Kenyan economy?
What will be the long-term economic consequences for this economy?
Yes. Or changes?
Okay. I think it's, in my view, it's still really out there for us to know how we are going to readjust back to our lives. And I think change is what is permanent. So it's going to change and change until it becomes stable. So in my view, a couple of things are going to happen. So to start us off, on the positive side is that we will realize that we must support ourselves. So what that means is that whatever little things that we used to maybe to import, we might be required, or we might realize that it's cheaper for us to go back to and revive our economies. So for me, that is a positive change, because when you look at in line with what the government wants to achieve, I think they have been forced to leap and deliver what they need to deliver. So I think that some of the changes that are going to be there is that the manufacturing sector would actually maybe come up and grow. On the real estate sector, my view is that we have to do different things differently. We are all working from home. Well, okay, not all. I think I would say 30% of the economy is working from home. So what that means is that people need to think about, again, about maybe putting up offices and things like that. So I think that is, the real estate sector really needs to be more innovative now going forward, especially for places where they are going to supply office spaces. I think for the education sector, yes, it's still, in my view, the public schools are yet to catch up, but the private schools are really caught up in terms of just kids learning from home. And yes, the education, the Minister of Education is saying that kids are at home, but the people who maybe the middle income, their kids are still studying. So I think those are some of the things that are going to change significantly, whereby the gap between the poor and the who has it will continue to grow, which also now might lead to an increment in crime, in my view. So those are some of the things that maybe the government needs to look at and almost cut them right now before it's too late.
Okay, and hopefully this will lead into a bigger investment into healthcare.
Yes, and you see the way the country, I think the way the devolved government is set up is that everybody is supposed to have sort of a referral hospital in their county. So if they can't see what is happening right now, hope now they can be able to channel money into that, into the hospitals. Because yes, the money has always been allocated, but I think the status has not been that high. So I think they will continue now putting money there. Especially the lockdown, it's actually also an eye-opener that I can have a sick person, but they can't get to Nairobi. So they have to be treated within where they are.
I have one more question, but I want to give chance to other people to ask. So I'm done for now.
Liz?
Okay.
This is Irene. We have a question from Irene Gishinga. She's saying, thanks for the great presentation. I like your recommendations on what the government can do towards recovery on post-COVID-19. And her question is, have you as Cytonn engaged the government in this regard?
So basically, we have not directly engaged the government in this regard, but what we have done is done a note on each of these matters, how the other governments have been able to do or what they are doing. We do it every week in the Cytonn Weekly, so that And in our database, we have a couple of people who are actually in government. So not directly, but we write opinions so that the government can actually pick from that.
My question is on, since the shutdown, my question is on construction and real estate industry. How has it been affected within the last 2 or 4 weeks?
The construction has really gone down because, first of all, at times when you're on site, maintaining the social distance is not that easy. Washing your hands and sanitizing is also not that practical. So people are learning new skills in terms of how do we do it within the safe confines. So I would talk about what we have done at Cytonn. So we needed to take us a pause, first of all, as we sort out reducing the number of people who are actually going to site. So a site like Alma, which we had 400 people, you actually realize that you have maybe 150 people. So it has really significantly impacted the space at which people are developing. So the issue is at what particular point do we know that what is going on? So that's what I think we shall wait and see. How do we proceed? But so far it is negatively impacted the real estate sector.
Now, what about the residential real estate sector?
So on the residential side, so the first thing is affordability of rent, availability of disposable income is definitely going to impact the affordability of real estate. So on the sell side, that has taken a hit in terms of just people, instead of, if am I buying the money I have, I can't use to buy a home today because I really don't know what is going to happen. And also the banks are restructuring their loan books. So it might be difficult for them to be disbursing more loans as they used to. So on the residential side, I think it will have to already to kind of pause, and if there is anything that is going to continue to be more of a wait and see until I don't know how many more months to come before we see a vibrant residential market. But now the actual numbers in terms of what we shall see, I think should come out in the next quarter. That's when we can actually now put numbers to the slowdown.
Okay, my other questions, I hope I'm not domineering. My other question is, are there things post and pre-COVID-19, are there things you think we'll never go back to? Because once the economy is opened, you know, we'll be asked to sanitize, social distancing, wearing masks, avoiding large crowds. Are there things you think we'll never go back to? And my other question is, can you mention briefly, how prepared were we in terms of online services? How was the banking industry prepared? How was the educational sector prepared in terms of like distant learning or online services? How are the churches prepared in terms of technology? What things should we work on in terms of technology to get us out of the post COVID-19?
I think the first question is hard. So let me go to the second one. On the second question on were we prepared, I think our banking sector is one of the most digitized sector that I would say. So that I think the banking financial institution sector, based on the fact that maybe when we had to cut the payrolls because of the capping of interest rates, so there's a lot of automation that went on there. So I would say the banking sector, on a scale of 1 to 10, I think I would put it like they were at 80%, maybe 90%, relatively well prepared. I think the education sector, and I'm just looking at the education sector from a normal mwananchi, not the outliers, the Brabants and all that, just a normal person, I don't think we were prepared. And I also don't think we are still prepared, especially for those of us maybe whose kids go to the public schools. I don't think there is a plan yet in terms of continuing to go to school. So I feel like there's a lot of things that needs to be done there. So I think that, so when I look at it really, I don't, as a country, I would say I would put the preparedness to below 50%. So in totality as an economy. Are there things that are going to change? I think from an economic perspective, I think working from home will be almost like a norm or an option, as long as now you are able to know how do I account for, how do my people account for their time, productivity wise and things like that. So I think that is going to change. I think on the education sector as well, maybe that is going to change significantly. And maybe just being Africans, one of the things that is going, the social ratios and all that, all those things are going to suffer.
Yeah, the other question, again, one more question. What sectors do you think may see an increase as this thing goes away? Or what sectors do you think may grow even more, like healthcare will grow, certainly? What other sectors at home will potentially see a growth?
Okay, I've just gone back to the slide that has the various sectors so that we can just go through it. I think some of the sectors that are, maybe one of the sectors that have been significantly impacted is tourism. So they really need to change their way of, I don't know how you change the tourism way, but those are, they need to be more, to think about how to come back, almost like bring back a different mode of business. So that one is going to be significantly impacted. And maybe something like transportation. I think that is one of the other sectors that is going to see significant changes, just because we have to change maybe our matatu systems, how do they operate, and it's going to be a difficult way. When I think about, you have to look at the most efficient ways of doing things. So even at the agricultural sector, we'll have to change how they do things. How do they not rely so much on 100% exportation? But for me, the biggest opportunity I see is in the manufacturing sector. I think that is one of the things that people will have to relook at and just put a lot of effort to it so that we can be able to be self-sufficient. The other thing, maybe financial services and insurance. And I would just say maybe something like, let me use Cytonn as an example. Investment management now is being offered like, everything is on digital. So I can actually buy goods from my money market fund. I can invest from my money market fund at whatever time by just dialing 8*09#. So I think there'll be a lot of, in the financial sectors and even in the insurance sector, you'll actually see a lot of digitization, and the people are creating more opportunities there.
Liz, we have another question from Sylvia Anyango. She asks, what would you advise an individual just considering to invest in Cytonn? So
my starting point on investment, it's usually it's usually a really personal journey, mainly because my goals are not everybody else's goals and my circumstances are different. So the reason, if I'm investing today for a very specific goal, let's say, for example, on the short term, I have to take my kids to school next year, then I must place my money in the most secure sort of investment. That secure investment is more of a money market fund, because I can reach out. I can reach to that. I can contribute that money anytime. The starting amount is very little, and I can get the money out at any point in time. So then, depending on what you're investing in, what you are doing, you're investing the money for, you really need to decide what you're investing in. If I'm a risk taker, I have a 5-year investment horizon. My suggestion is for you to invest in an equity fund or take a real estate unit, because that's what really would matter on the long term. You can ride the market. The market can go down, it stays down, and then in the next 1 year it goes up, and you reap from that. So what I would tell her is that we really need to see what is it that she wants to save out for. But the easiest is really just looking at the Cytonn Money Market Fund. It's the easiest to invest, to understand the organization, and as you earn a return.
Hi, Liz. This is Douglas. My question is specifically directed on real estate, and I'm going to ask questions about renters and landlords, especially in this period of the pandemic. It's very hard for everybody globally, especially for tenants who cannot be able to pay the rent, and the landlords who have bank loans. They cannot be able to service those loans because tenants are not paying money. Is there a mechanism like a structure in the government that protect the landlords from being listed on the CPR because they cannot be able to pay their loans to the banks?
Actually, none. Okay, none that I'm aware of. So the answer is there is really no protection from the tenancy or from the landlord side. So what the government just said is that just encouraged banks to go and sort of talk to their banks to restructure the loans, but not giving the mechanisms of how or why you qualify or anything like that. So I think it's going to be a long, it's not going to be easy for the landlord, neither is it easy for the tenant, because it now borders on terms of what, being a human being. I don't know, how do you kick someone out fully knowing that they cannot service, they don't have anywhere to go, but at the same time, what do you do? And you have a bank loan on the other side for your asset to be foreclosed. So it's such a out there. So there is nothing like in the regulation that protects either.
So that means we are going to see cases of banks trying to recover properties from individuals because of defaulted loans.
The unfortunate thing is, yes, because we had actually already seen a big list on, if you look at the standard digital, the classified pages, that had already picked up even before the pandemic. So the economy was already not doing very well, but what we saw is that there was a lot of encouragement and the banks were actually, the credit to the private sector had started to grow. But now with this, now it has dipped again. So it's going to be a very difficult time. Yeah.
Okay.
So we can say that we're gonna experience a long-term impact on real estate, especially due to COVID-19.
Yes, definitely yes. That I would say it's going to, and you see the problem with real estate is it does not recover the next time. So I would say the whole of this year, maybe it's going to be a very difficult time for real estate.
Okay.
Okay, mine is a comment. I was looking at the recommendations that were given by the state of Massachusetts, reopening of places of worship. And one recommendation was when we go back, we maintain the 6 feet distance, sanitize your hands, wear masks. But what caught my eye was they discouraged the giving of money in terms of like actual cash. We are now encouraged to use here we use Cash App and other, or you can even write a check and put it on the mail. Is it something Kenya would be looking at? Because they're saying once you touch money, money could also be a way of, or part of the infection chain. So is it something that you might recommend to the government or the guys who are looking into reopening of the places of worship? We move over to a more cashless system. My other question to you is, in US, we have the credit reference bureaus. They're like 3 or 4. In Kenya, I'm sure there's something, I'm not very familiar with the CRBs in Kenya. Could you mention something in that regards, and especially around this time of COVID-19? Are you guys penalizing people who are not paying rent? Are you penalizing guys who are not paying, who are not on time with your bank loans? What is being reported, what is not being reported? Are they being lenient in terms of their records?
So, okay, the first one on whether people are being encouraged to use digital money, I think it's something that most churches had already embraced before. So it's just an issue of, it was not highly, how do I say, maybe just speak for myself. When I go to church, yes, there is the M-Pesa bill number, but I feel like I'm not, sijatoa sadaka kama sijaeka. So it's just a mental sort of shift that needs to happen. So it is going to take time for people to see that even M-Pesaing is just a way of paying your tithe or something like that. So I think it's more of a social journey that is going to happen. By the time we get there, I think we shall get there because it has been used. But in terms of buying commodities, that is one of the things that maybe was done initially. People, when the COVID was reported, there was a lot of push towards digital money. Don't pay using notes and things like that. So I think that one is going to be embraced. I've forgotten the second question it was about.
Credit reference bureaus.
Oh, there are credit reference bureaus and they're very active. So what happened, so we have a lot of digital borrowing in this country. So there is Okoa, there's quite a number. And people would borrow for from each of these people. So what they used to do is then you are listed in the CRB. So I think early this month or late last month, there was a directive that you should not be listed in the CRB if your loan is less than 1,000. So anyone who had a loan of less than 1,000, then they were kicked. Their data was cleaned from CRB. Then so that gave some sort of relief to so many people. However, remember these people who are borrowing from many institutions or from many mobile lenders, they really don't care about their records. They don't even think they are going to borrow maybe from the banks and things like that. So that was, I would say, it will affect some people, it will help some people, maybe not the person who wants to maybe take a mortgage. So also what the government said is that if your loan was up to date as at April, I think you should not be listed. I don't know what period of time they gave, but they said you should not be listed with CRB as long as your loan was up to date up to that particular time. So that provides some sort of reprieve for anyone who is going through a restructuring sort of life because of COVID. So the CRB is pretty, in Kenya, I think it's pretty advanced, and the banks actually use of it quite a bit lately. But we don't have things like defaulting in land. No, the thing is, it's only, I think it's only open to the banking sector or the mobile, and so things like the landlord, you will not take someone to CRB because of your rent. At least I've not seen anything like that here.
So there's another question, Liz. Can you advise on long-term investments?
Okay. My definition of a long-term investment is anything above the average age of about 5 years. So you have an investment horizon of about 5 years. If you can wait and for an investment for the next 5 years, then it does not make sense then for you to invest in short-term investments like maybe money market or a fixed deposit. So what makes sense then is for you to take, you can actually afford to invest part of your money into the stock market. You can take part of your money in maybe in real estate. So those are the things that you need to look out for. So maybe what would be helpful is maybe if you can get the contact of the client, and then you can be able to explain to them and look at what they want to achieve and maybe explain where they are in terms of the investment journey.
Okay. There's another one from Anna Kagwamba. She asks, what are the major risks that COVID-19 situation has exposed Cytonn to, and what measures have you taken to mitigate the risks? And number two, what is the Cytonn liquidity situation this year for the year 2020? Has COVID worsened the situation?
So in terms of for Cytonn, we had to change not change, but now aggressively move into more fund management sort of business. Initially, our bias has always been real estate. We still have a huge real estate portfolio. But if you look at what we are currently pushing, it's more on the money market fund, maybe education policies, the housing fund and all that, for you to be able to save towards maybe your house or towards your kids' education. So we are looking at more liquid investments going forward, and that's where maybe we are advising clients to. In terms of the liquidity situation for Cytonn, just like any other real estate fund, it has been really difficult because the construction time has gone down. The people who had bought into your assets are not being able to pay on time. Then the housing, the Ministry of Lands is also closed, so you cannot even be able to push people to pay for you to give them their apartments. So the whole COVID situation has actually pushed Cytonn's business into some sort of, there is some sort of liquidity issues right now, just because we are not being able to collect from investors on time. So what we're actually doing is looking at how do we diversify the portfolio much more, and just looking at more liquid assets at this point in time.
Thank you for that. We have another question from Emmanuel Kisa. Hi Liz, trust that you're well. What horizon do you forecast the downturn to last? I am one of the people who believe that, looking back at the 1918 Spanish flu, things after COVID-19 will follow the same pattern, and within 1 year, due to human behavior, we will have gone back to our default settings.
Mm-hmm. How long? This is my view as Liz. I don't think we are going to, COVID is going to go away. We are going to learn how to live with it, and how do we adopt the new norm. So I think the issue is with us until when maybe we can get a vaccination, the vaccine for this, or sort of a cure that helps with this. So the issue is how then do we adopt going forward? So I see maybe in this current pattern, there could be some sort of a lull, maybe going for the next 3 to 6 months, but thereafter, then we need to know how to live. Are we going to adopt more going to, working from home and working in shifts? But what does that mean maybe for other sectors? So I feel like here, by maybe come next year, then we should have adopted to the new way of life. In terms of us defaulting back to a normal life, yes, we forget we are human, but at the same time, I don't think there's also creating a new norm. So I feel like it will be a combination of us forgetting, but at the same time, it's creating a new norm. Wearing a mask while maybe outside, it should be like the normal way of life. So those are some of the things. I see that it's a combination of back to where we are, but now creating where else, what is the world with COVID?
Okay, we have another one from Ada. Have e-commerce companies such as Jumia seen significant increase in their websites, and can you speculate that Kenyans might lean towards these services after the COVID-19 curve has flattened, and if not, why?
I think online shopping, again, it's more of it's more of a journey for acceptance. So we actually see most of the companies going online, as even here, because I think even supermarkets you can shop online and they just deliver. I'm not personally, again, just being old school, I've not been able to experience that much here in Kenya. So I think it will be a journey, and I would not say it's even a COVID issue. I would say it's a generational change. So there'll be a generation who might not see the need to go to a supermarket to shop. So that will be a journey. So I think there's going to be an increment in online shopping. What I don't know is, I was just reading an article, I don't know when, about Jumia, that their share prices have not done so well, and there's a whole sort of a story there. So I need to understand what is the Jumia issue, what is truly a Jumia issue, and what is an online trading sort of issue. So I think in the long term, e-commerce is the way to go. But I think there is also that bit of human perception that, let's say, for example, even if we went and bought and really embraced online shopping, I doubt someone will just go and buy, not many people would actually go and buy construction material online. Most people just want to touch and feel. So I think it will be a blend of a long period of time.
Okay, we have a raised hand from Anna. Anna, I think you can ask your question.
Yeah, my question is, I had asked the 2 questions which have been answered, but a follow-up on the 2 questions on the liquidity, and Liz has confirmed that the real estate sector will be very affected. So my question would be, what is the percentage of Cytonn investment in real estate? And I think Cytonn is a real estate company. If the percentage is high, what is the likely percentage of effect on their P&L for the year 2020, and how will that affect the investors?
So in terms of, so Cytonn has two sort of arms. So there is the arm that is real estate, and most of the funds are actually invested. They're actually 100% real estate funds. So when you speak about maybe like something like Cytonn project notes, it's largely a real estate. The bulk of the investments will be in real estate. So in terms of how the P&L might not be affected significantly because it's percentage of completion. So nothing, since you're not constructing and you're not putting in money, so there's not a significant issue. So where the challenge is that you might not be able to pay your investors when their money falls due. So that's why we actually went ahead and just extended maturity so that we are able to wait out this COVID situation. The lands offices are open and people are able to pay. So that's what I would say in terms of there is a real estate bit completely, and then there is the money market bit.
Okay, thank you.
My question is, there's a lot of hopelessness and despair, especially for them that have lost a job, them that are away from their normal settings, like school settings. They have to adjust to the new normal. What advice or resources, or what can you tell them, the people who are just stuck at home, they don't have a paycheck, the kids are home, maybe they're not being allowed to go outside, they have to wear a mask that's not even fitting, that's not the correct size, they have to sanitize all the times, they cannot see their cousins, they are not celebrating their birthdays are normal. What kind of, what word of hope or assurance, or where can you direct them at this challenging time?
Now, SAMRACK, you're telling me to be a religious leader, right? So my view is there is, as long as you're alive, there is something for tomorrow. So it's just an issue of wake. It's good enough that you're not sick. So it could always be worse. So it's just looking at it and making sure that wake up, look at what you can do with yourself. As long as you have your whole, just look at what you know. You start from what you have and then walk from there. I really don't know what else to say other than trust in God. There is always a better tomorrow. And thank God that at least you're not sick.
Thank you.
If you're sick, you're going to recover. There is just a way that God will walk you through.
Thank you.
Yeah.
Hey, Liz, I'm gonna ask you one more question. Actually, this is gonna be the last question on real estate, and I'm gonna talk about cost of building materials and the labor. Do you think this year the cost of building materials is gonna go up? And what can you tell about the labor cost for the construction in real estate?
So my thinking is, from a fundamental perspective, and I'm just looking at demand and supply, basic. So the cost of material might not increase significantly because, assuming that you are getting the construction materials from your locality, because the only thing that has changed right now is the ability to move from one county or to another. So if your construction material are within your locality, I don't see significant changes. Then there is a lot of people who have been laid off. Assuming people of the mentality that I need to put food on my table for my babies, this is what really matters. I would also say that labor costs should not change. At worst, they should come down. So I just feel like the cost of construction should at worst remain stable, because oil prices have come down. And when you think about it, the cost of materials are actually, when you're buying materials, 30% is transport. So if your cost of transport has come down, then you should actually see a decline in that.
Okay. Thank you.
Okay, we have another question, Liz. What are the prospects of solar energy in Kenya? Are there any government incentives such as net metering to owners?
Solar energy in Kenya. I don't see from a government perspective there is anything that they have done to encourage that. But it's not a topic that I'm so comfortable with, but I can do work on it. Because I don't see anything that they have done to support that. So I know of commercialization of wind energy, but I don't remember anywhere I've read of solar energy.
So it seems like we don't have any more questions. So maybe we can just get some remarks from you and Sam, and then we can close.
For me, thanks so much for joining us. I think this was very educative and it was very interactive. So it gives us different ways of thinking. So thanks so much for this, and happy to continue hosting this with the topics of your choice. So maybe the people online, you can tell us what is it that you want to hear from us back here, and we'll do the work and we have a discussion. Thank you and have a good day.
Thank you, Liz. That was a wonderful presentation. You answered the questions correctly. My comments is some of the things that drive the economy is a thriving manufacturing industry. We hope that the government will encourage and give incentives to the manufacturing industry, especially around this time. And as we all know, during crisis, millionaires are also made, and also a lot of people go bankrupts and that kind of thing. So it's also, as we go through this tough time, it's also good to realize that, you know what, I can also be a millionaire. We just have to be creative and innovative. And also, I hope that the government will give the small businesses a lot of incentive too, because also manufacturing and small businesses are the two big industries that drive the economy. And we hope that the economy will not be really hurt. We know it's a tough one, but we trust that God will see us through. This is not the last time we'll have you, Elizabeth. We'll have more meetings, and we were very much enlightened, and this was a recorded video. So after this, it's gonna be made available to all of you for reviews, and you can also share with your friends. And thank you very much, Cytonns. It's not the first time we've had you. You have a large diaspora presence here. You even have a diaspora representative that represents the diaspora. And we thank you very much for according your time and giving us this opportunity to interact with you guys. Thank you very much, everyone. Enjoy the rest of your evening. Enjoy the rest of your day. Thank you.
Okay, thank you.
Nice. Jonathan.